Hey, Job here. On this channel, I invest 100% of my income into growth and high yield income ETFs to create monthly cash flow that will eventually cover all my expenses and replace my full salary. It's a big weekend this week too, as it's been exactly a year since I launched my YouTube channel, just this past Friday actually. Boy, as it flew by, and I'm incredibly grateful for all 7.6K of you who've been tuning in across both the main channel, Fully Invested Fi and Fully Invested Fi Labs, tuning into my investing journey and hopefully my early retirement journey down the line. Love the little community that we've built up over time and just super grateful. And if you're new to the channel as well, given that it's been my 1 year since I started this, now's a good time to check on some recommended videos for new viewers. You can always check it here on the main channel page. But you could also just jump away to my very first video that kind of started it all and that kind of popped off and really gave birth to the whole channel. So definitely check it out if you're new to the channel here. Just again, super grateful for everyone that's tuned in and excited to keep this going and keep the transparency up week in, week out, and to just keep growing this community. And this week we'll keep the train going. We'll go over my week 63 portfolio update since I started the strategy in May 2025 last year. I'll go into all the details of my performance this week, breaking down how I outperformed the S&P 500 by over 4.8 times this week with my 6.73% total return gain. I'll check in on my margin health, my dividends received, and go through some big portfolio changes that I was hinting at in the previous video. I'll go over why I sold out of ORR and KCOP this week. And this week, honestly, been busy with just catching up on other podcasts and stuff and haven't quite watched much finance videos, so we'll be skipping that. All that said, as usual, you'll get radical transparency on this channel, whether the market is up or down, and you'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, make sure to give a like and subscribe. Just a quick disclaimer. As usual, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. So make sure you have a good read of this full disclaimer and all the risks involved. And as far as the weekly flow chart, again, I'm not going to quite go into this because I have a video here where I break down the whole thing, so check it out on the top right. Feel free to pause and take a look at the typical flow that I use every week to invest my full paycheck and live out of the brokerage account. And let's just get started and jump into Robinhood. So if we pop over to my live portfolio view here, you see all my positions. I'm filming this on Saturday night on the 8th of August. And we ended the week at 232.6K. So we had a big green week this week. Was up 1.41% on Friday, 3.2K, and a little bit more on after hours. If we check on the week, as I mentioned, I was up 6.73% or 14.6K. So just a really nice green week overall. So that really gave us some good gains. On the month, I'm just under positive here, negative 0.17%, so down $333. On the 3 months, I'm up 7.3K or 3.25%. Year to date, I'm up 25.06% or 46.6K. So again, like all these views do include gains and losses, dividends, realized P&L, margin interest that gets deducted as well too. So overall, pretty great performance over there. And if we compare it to the S&P, I'll bring that up here. So on the week, I was up 6.73% and the S&P in that same time period was up 1.39%. So just nicely outperformed it there. If we compare it to like QQQM, I think I just slightly outperformed QQQM if we check it. So yeah, QQQM was up. Oh no, QQQM was up more. So I underperformed QQQM and QQQ. So it was up 7.82% this week. So quite a bit, which is nice. And that's where we ended. And then I'm up so far 53.7K or 30.04%. So pretty nice since I transferred over to Robinhood in July last year, essentially. If we dive into my portfolio spreadsheet here to take like a deep dive look at everything. So yeah, you'll see that if we add up all the assets together, I think this week we've pretty much hit a new all-time high with the gross value. So I'm sitting at 434.2K. I'm sitting at 202.1K of margin. So if we minus that out to the gross value, you get your net value here. So 232.1K. So that's how it's looking. You can see here that with the nice green week that we've had, we've kind of started to flip to a lot more green here, both on the total return column and unrealized gain side. So I'll notice that we'll get into this later, but a couple positions are gone. So ORR is gone here on the growth and hedge side of things, and KCOP is gone as well. So ORR got reinvested both into CLSE and IALT, and then KCOP got sold and reinvested into KGLD. So I'll get into all this later. We're just going to go over all the numbers first. As far as like what's red, DRAM definitely still printing the reds. The only thing in the red left right now on the growth side of things. On the high yield income side of things, so like on the gray part here, YMAX actually got back into the green surprisingly, while still being on the red on the unrealized gain side. ULTY just slightly in the red here as well in total return. Goop kind of has come down a little bit. It seems like Google had some difficulty this week on top of like the big losses it had a couple weeks ago. And then blocks and BTCI just still struggling still on the crypto side of things. Not like BTCI has had a little bit of a run up, but not too much. And blocks has kind of been struggling a little bit. But overall, on the total return side, so that includes my realized gains, dividends, and all that against my net value, I'm actually up 111.3K. So firmly above six figures, which is awesome. Or up 47.95%. And then if we go on the unrealized side of things, so nicely up now too with the gains this week. So up 6.17% or 14.3K. So that includes any unrealized gains and losses and whatnot. So this is just under the zero mark here with some of the gains that I realized through SHD the other week. So that's how things are sitting there as far as kind of total return and unrealized gains loss. As far as how things break down between growth and high yield income, so I'm sitting at 191.2K in growth and 243K in high yield income. So 55% in high yield income and roughly 44% in growth. So that's what makes up the 434K that we have here. As far as the margin health, sitting nicely with the run up this week. So my equity is sitting at 53.45%. If we check on my gross portfolio value, margin used, net portfolio values, that's all the same. But if we take my blended margin maintenance, which is 25% across the board for all my positions, that's one thing I like in particular at Robinhood with their margin maintenances, and you apply that to your gross portfolio value, you get this number here. So 108.5K, right? And this is the value my portfolio would have to fall to basically trigger a margin call. So that's right now a 123.5K buffer from my net portfolio value, which is pretty nice. My margin buffer. So on the net portfolio value, sitting at 53.23%. And if we go off my gross portfolio value, so this is what you see on Robinhood. So if we go here, you'll see that over here, roughly matching that. But like I say, I like kind of keeping in mind the gross portfolio value because at the end of the day, this is all the money that's at play in the market. So if this swings 28.45%, that's the equivalent of a 123.5K swing in margin buffer. So that's the equivalent, if amplified, right, of this 53%. So that's the thing that's really important to keep in mind. Like the 53% swing can happen a lot easier when you're using margin and your leverage multiple is higher. So in my case right now, it's 1.87. So you can even just do the exercise here. So like if the 28.45 times the leverage multiple roughly gives this 53% essentially. So very important to keep in mind the leverage multiple. And that's why you don't want to super over leverage up front to like say like a 5 or 10% swing will wipe you out. So definitely worth calculating your gross margin buffer. So you basically just take that by taking your margin buffer over here and then dividing that by your gross portfolio value. My buying power this week is sitting at 82.1K. So you take your margin total minus your margin used and you get that number. So this is technically money that I could use to just fully invest if I wanted to. But again, I don't want to do that. I want to keep the buffer as high as possible to really stay away from margin call. If you take half that amount, that's roughly your cash available for withdrawal. So 41K in my case. So this is 41K that I could take out of the portfolio if I wanted to as like cash. So you could either just invest 82K of it, or you could take out 41K as cash. It's either or, right? Or a mix of both. But again, I just want to keep this growing and keep that buffer high. As far as the income from the portfolio, so right now I'm generating roughly $5,497 every month. So pretty awesome. This is like, if I was being paid semi-monthly instead of weekly, this would actually be a full third paycheck in the month. So it's pretty awesome overall. That yearly, that amounts to 65.9K. Weekly, that amounts to 1.2K. And then daily, $180. So that's roughly a 27% distribution yield if you just go off the money that's invested in the high yield income assets here. But if you go off the full portfolio value, it's sitting closer to like 15%. But again, this is not free. Like this is a sizable margin balance. I'm actually paying a 4.5% interest on it. So that's roughly $754 a month. But as you can see, for all that leverage, I am making a lot of income. So 5.4K. So that's a 4.7K margin spread. So basically 22% yield that I keep after the margin interest. So pretty positive spread overall in that sense. So it's pretty great margin arbitrage that I'm really happy as a spread. So that's where that's at against the margin balance. And it's the numbers on the sheet. And by the way, if you're ever interested in the sheet, you can always find the link in the description of any video. I have a Gumroad link here that leads to the spreadsheet. And that's a $5 one-time fee in case you're interested, and a little price of a coffee. And let's pop over to Snowball to take a deeper dive in things. So here I like kind of separating things a little bit more in categories. So for the ultra yielders here, so anything that yields any over 20 to 30%. I'm up 10.7K or 8.77%. A lot of that is being carried by Chippy, and then GIX actually kind of started getting back into the green this week, which is awesome. I really expect this, given its credit put spread strategy and how it's more diversified in like VU and mid cap and small cap and international, should have some nice appreciation in the long term. BTCI and blocks, whenever crypto recovers, I expect blocks to kind of come up a lot more. And then YMAX and ULTY, people ask me about these a lot, and I get a lot of flack for these. But again, I'm not investing in them as much anymore at all, really. I haven't since maybe like January. All I'm doing with this is that I'm kind of collecting their income and then reinvesting them into the safer category here. So the anchors, the 10 to 20% yielders. So these are up 12% or 16.4K. So as you can see here, most of what's in here is either indexed or kind of like alternative assets. So like MLPI, which is like more on the MLPs and energy infrastructure, KGLD, which is gold, and Goop here, which is Google. So this is the only one that's like not indexed. And this is where I keep all my YouTube earnings. I invest in here. I think that's like slightly red right now because it's a lot more volatile. But most everything else is indexed. This is like SPY, QQQ. This is a mix. So these safer yielders, you can kind of see that like my cost basis is a lot lower than where it is now. So there's no erosion here at all. And plus it's paying a good yield between 10 and 20%. Whereas here in the ultra yielders, you really see the NAV erosion, right? This is 122.5 cost basis, but 99.6 in value. So it has calmed down. What's really pushing up the total return is really the dividends. As far as my hedges, so there's only down to 2 now. So IELT and CLSE. You'll notice that I actually moved gold out of there. And I'll get into that again later when we go over the major portfolio updates. But for now, IALT and CLSE nicely in the green. So IALT just 1% in the green and CLSE 11% for a total of 3.3K overall and 8.47% up. And the goal with the hedges here is for them to kind of stay relatively stable. Right? These two are long shorts, so they're a lot less volatile and have a lot less beta compared to the rest of the market. So I'm hoping for this to kind of slowly go up, but also just kind of mostly stay in that kind of range and kind of stay within that 10% allocation roughly. As far as my growth side of things, that's sitting at 64.7K gain or 52.9%. So that includes capital gains, realized P&L, dividends received, quite a bit. And there's VU, VGT, SPMO, QQM, DRAM, AVLV. So these are all firmly in the green apart from DRAM here, but this should hopefully come back up. And that's how everything is split up right now. Everything's pretty close to the target allocation. The only thing that's pretty off right now is probably the ultra yielders here and the growth anchor ETFs. So eventually over time, this will correct as I keep investing. If we go over to how we're performing against the S&P, again, we'll take this with a little bit more of a grain of salt. This is just to more see the overall trends compared to the S&P, just because like, as you'll see, like the numbers kind of differ quite a bit from what I see in Robinhood. So let's do that here. So as you can see, this is almost close to Robinhood. So just off by like 0.05%, not bad. I kind of see like the margin amplification, it works both to the upside and the downside. But in the case this week, I actually had enough of an upside that it kind of carried me through. You can kind of see how that worked out over the last week here. And as far as the heat map, let's just isolate it to this week here. So we can see that the big winners, so MLPI went down. So with constantly the war in Iran, things are easing and then not easing off and going up and down. But this week was overall down with things kind of cooling down. But I'm sure it'll heat up again, but oil went down. So MLPI went down accordingly. CLSE, I guess maybe some shorts there kind of backfired. So it's down 1.4%. Google was down a bit this week, 3%. Blocks as well, 1.9%, while BTC itself rallied. So interesting for blocks this week, kind of dragging down there. XPAY pretty much matched VU, which is always good to see. SPMO, good momentum this week, up 4.1%. Chippy up a lot, 6.6%. Large cap value with AVLV up 1.8%. TDAQ up 4.6%. So just slightly trailing QQQM, its reference index here. ULTY and YMAX actually beat out VU, which is always cool to see. VGT up a lot, 7.3%. GIX up massively this week as well. OVL outperformed VU, which is good to see. So even had uncapped upside even higher than VU, which is always interesting to see. MLPI we went over already. ILT stayed relatively flat, which is good to see given that it's a hedge. And TSPY slightly underperformed VU here. It's always generally going to underperform. I wouldn't expect this to necessarily beat it a lot. Sometimes we've seen it on some weeks where it does beat it, but quite this week. But so where the heat map's looking. If we go to the year, we're seeing that we're kind of just more and more green. The ones lagging behind here are BTCI and blocks and DRAM and Goop here a little bit, but it's a relatively fresh position. But a lot of green though. SPMO very green, Chippy very green on the year, QQM, XPAY, and VU. So VGT up a lot as well. So always good to see how things are trending and what will help inform later buys next week, given that I'm investing every week. As far as dividends, if we pop over, so this week we made, let's see here, $81.32 on Monday, $84.73 on Wednesday, and $786.23 on Thursday. So made $952.28. Not bad, just under $1,000 this week. So got $41 from blocks at 37%, got $39 from GIX at 24%, $84 from TSPY at 13%, Chippy $341 at 38%, KGLD $192 at 15%, ULTY $160 at 58%, and YMAX $91 at 39%. So good week overall. Next week's looking to be even better here because XPAY is going to help shore things up. And this month we're trending towards getting roughly 5.1K this month. So not going to quite beat the year over year. Last year was a hard one to beat. 5.7K that we got in August. So that's not going to quite happen. I think basically August and October will be hard to beat, but September, November, and December we should handily beat it. As far as yield on cost, you can kind of see that like with everything, my yield on cost is actually higher than my normal yield here. And that's thanks to things like Chippy and then also just the anchor income funds over here. So you can kind of see the erosion that happened through ULTY and YMAX over here. So like, given all the capital that I have into it, I'm getting like a 58% yield this week, but with all the capital I've invested, the yield is actually closer to 32%. And YMAX, same thing, getting 39% this week, but its yield is closer to 23%. And BTCI and blocks have eroded here a bit as Bitcoin has come down. But you can really see this why I'm investing really in this kind of center portion here, right? So GIX, XPAY, BCAT, TDAQ, MLPI, KGLD, Goop, TSPY, OVL. These are, even as they come down, they hold their yields pretty nicely and their NAV holds up nicely. So these are great anchor income funds here, what I've really been focusing on this year. And then any dividends I get from ULTY or YMAX or Chippy and even GIX and blocks, those all get reinvested into these core anchor funds here. So really the solid roots, essentially, of the whole system in that sense. That's all the numbers here. And again, you can always see this portfolio for free. See that Snowball portfolio link in the description below. This is completely free. See all these same numbers that I show you week in, week out. I love using a combo of Snowball and my spreadsheet because it's more manual. Can get to see changes as you make them. But here it's nice to have that automated portion and a lot more stats to go off of, right? And then as far as big changes to the portfolio. So as I mentioned, I ended up selling out of ORR. So that used to be in my hedge sleeve over here. And really, like if we pop over to Discord, I made a whole post about it. So I basically sold for a very tiny gain. So basically flat on it, 0.65% gain or $115. And ultimately it came down to like how it handled the recovery or basically non-recovery for itself from the Iran conflict dip, right? So practically every other position I had kind of rallied, and that was kind of like eye-opening and disappointing for ORR. That kind of stayed going down. So you can kind of see if we pull it up here. Or actually, we can kind of pull it up on Snowball here, since we'd probably just see my history here as well. So I basically bought here near the top, and then it kind of came down quite a bit from the Iran dip, and it only kind of really recovered recently. I'm kind of selling as I've been kind of getting green lots here from these guys. So you can kind of see my sells here, and then my big sell this week. So it really just came down to like just being disappointed by its performance there. I think like CLSE and IALT have been a lot more impressive in that way. Like if I go to IALT, and bring up thing here, you can kind of really see like it's as if the Iran conflict never happened. This just kind of kept marching on, which is cool. And then CLSE recovered along with everyone else, which was nice to see. So it's, I think, or in that sense has really, you can kind of really see these charts like side to side, how much that changes. So it came down to that. And then honestly, there's a lot of like craziness with the yen happening right now with the yen carry trade and a lot of commotion there. So I'd just rather not hold through that. So I ended up splitting the proceeds between both CLSE and IALT. So both of them are kind of long shorts. C is on the US and IALT is a lot more international and has like a lot of more alternative assets as well too. So I think I'd rather get my international exposure through IALT there versus ORR. And ORR in a way too was very overly concentrated in Japan. And I think that's part of what dragged it down so much during the Iran conflict recovery, because I think Japan was a lot more exposed to the Strait of Hormuz action there. So I ended up buying half into CLSE and then half of IALT with those proceeds. And again, like the purpose of those really, of this sleeve, is to really have the volatility and the beta be a lot lower compared to the rest of the market. It's quite a bit lower when you test them. As far as the other big change is that I did sell out of KCOP and put it into KGLD. And then as a byproduct as well too, you'll notice that KGLD moved out of the hedge sleeve, where I was previously doing $200 a month buys of KGLD as gold as kind of like a hedge against the market because it's relatively uncorrelated. But after thinking about it more and after kind of seeing the performance side to side with all of these, like I think I'd rather do the $200 a month towards IALT and CLSE with their a lot lower beta and volatility, and just kind of consider gold an income fund at this point. So just kind of wrap it back up into an income, because like gold has just been a lot more volatile than it historically has been. We can kind of really see how crazy it spiked like crazy over the year and then it's come down a lot, and it seems like it's recovering a little bit here, but it's just how it is. Like gold has been a lot more volatile than it historically has been. So I don't think as a hedge, it works as well anymore. I'm thinking these two might work a little bit better. And again, it's not a perfect hedge, right? It's not like a hedge as in like the traditional put insurance or whatnot. Like these are not going to like balloon up as there's a market downturn. These will still come down some. But overall, I just want to reduce the volatility and the beta compared to the market here. So just want this to kind of stay in the relative like 10% allocation range and within this kind of 42K range, right? And for this one as well too, made a whole post on this too. KCOP really was kind of like a play on the AI infrastructure boom, and definitely it's a lot more volatile, especially even compared to gold. So wanted to reduce the volatility a tad and kind of diversify away from tech and AI in that sense, just because I'm already so heavy in it across a lot of my other positions. So I just consolidated any money that I had into KCOP into KGLD. So that was like roughly 7.3K and sold for a little gain here and even better total return gain, and just wrapped all of that into KGLD. So that's why my dividend for this kind of doubled nicely this week. And part of it too was overall, I think like for better for worse, position kind of ballooned over the last several months. So just wanted to consolidate and trim down a little bit. So part of why ORR came down and also KCOP. So just a lot less decisions to make as far as like what I might kind of split my money between on any given week. Hopefully that explains it. If you have any questions about that, definitely happy to answer them in the comments below if you're curious. That's the big updates this week for the portfolio. A lot of money that moved around. 7.3K here in KCOP and then 17K in ORR. So always nerve-wracking kind of when those big sums of money are moving around. And I put this little gif of Mr. Miyagi trimming his bonsai tree here. That's what it feels like sometimes when you're kind of playing around with positions. So if you ever joined the Discord server, a lot of like-minded investors here. We're sitting at a little under 450 members right now. I give all my trade alerts here. You get early heads up about any big sales like this. But I love the little community that we've built over the last year since I started the YouTube. It's just great to be having tons of people to talk finance with and go back and forth with. A lot of members to learn from. A lot of people post their portfolios and give updates on them. A lot of different ways people are living out of their brokerage. There's not just my way. I'm very open to learning about others and seeing how other people do things. There's always lots to learn. So you can join this through my YouTube membership or my Patreon membership for $3 a month if you're ever interested. And as far as my finance video of the week, as I mentioned, none this week, honestly. just to be sidetracked of finance, like all I was listening to this week is That Was Us. I've been rewatching This Is Us. That was kind of my layoff watch when I was laid off. I binged the whole 6 seasons of it, and honestly, great show. Love it. Super emotional, super funny. It's after watching Paradise and learning it was from the same show creator, and then Crazy Stupid Love for people that like that old rom-com as well too. Steve Carell and Ryan Gosling one that has tons of memes. This is what I was watching a lot this week. So less finance stuff. So a little bit more wholesome. Curious if anyone else watches this or has watched This Is Us. Yeah, great show. Definitely worth checking out on Hulu if you have it. For that reason, no finance video of the week. Hope that's okay. Hope they'll be back next week. But again, just a big shout out to everyone in the community, all 7.6K of you. Super grateful for everyone tuning into the channel for over a year now, or for exactly a year, a couple days over a year. I never thought I'd be doing this, and it just kind of ended up happening that way. And I've been enjoying doing this as like a little side gig and just for fun and sharing this with all you. And we'll see how it all pans out. Like so far, it's helped me through a layoff. I've been through a couple of market downturns. I think I just need to go through like a bigger drawdown, like something that does like say like 20-30% over a year, for example, or even over a couple months, and see how this whole system handles it. And I think that'll be the big test to really see if that kind of stands the test of that. Just another medal to add if it does. But so far so good. It's been handling the layoff and these dips fine, and I've been investing throughout. The goal is to just keep investing no matter what and never interrupt my compounding. So hope to keep doing that and keep doing it in public and transparently for you all to see. And you can see all my numbers as I do it. My goal is to be the most transparent channel there is in that sense. So again, thanks to everyone. Super grateful for all of you, and excited to keep seeing you in the comments, on the Discord, and on all the different videos. If you want to catch up on my last video before this one, my full paycheck investing, definitely check out the video at the top. And if you appreciate all the transparency, make sure to give a like and subscribe. And I'll catch you in the next one. Peace.